And welcome to our latest video focusing on the GBPUSD. Remember last week the pound sterling capitalized on the softer than expected US inflation data for the month of April, reaching a fresh monthly high around the 1.2700 area, as you can see on my screen right now. And in fact, the structure you're seeing on our screen is the trading setup we had in preparation for last week, where we had this beautiful descending trend line broken to the upside to give us an insight into the potential strength of the buyers in the market. And as a result of this, we were able to capitalize on this 175 pips move all the way into that 1.2700 area. For a detailed breakdown of each entry point, you can check out the link in the description box below for reference purposes. And congratulations to everyone who joined us on this profitable journey. Now, the question arises, will this momentum persist and continue into the new week, or are we likely going to be seeing a decline to favor the US dollar? Well, this coming week's United Kingdom inflation data is going to be offering fresh insight into the Bank of England's interest rate outlook. And in fact, as it is right now, investors are divided between the month of June and August meeting for potential rate reductions. Additionally, recent hawkish comments from Federal Reserve officials might cap the pound sterling upward trajectory and may incite a massive sell off. So, in this video, we will be dissecting the chart to understand how market participants anticipate the new week. As always, we will be leveraging our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to gauge potential price actions direction. Before we proceed, it's crucial to emphasize that this presentation serves educational purposes only and should not be taken as financial advice. Forex trading involves inherent risk, so it is essential to approach it cautiously and seek guidance from qualified financial experts. With that in mind, let's delve into the analysis and uncover the opportunities that lies ahead. So, my first point of contact today is going to be on the 4 hours time frame where I had to take into consideration the character of price action since the last week of the month of March. And of course, if we do that appropriately, you will see this is what I was able to come up with on the chart. Now, first of all, the first thing you would observe here is that descending trend line from last week's trading session, which has actually supported the bearish momentum in the last couple of months. However, the breakout of this descending trend line for me was a very good signal for us to capitalize on that uptrend momentum. However, with the recent buy pressure emerging on this chart, you will notice that price action is back into a crucial juncture around the between the 1.2700 area. As you will see, since the month of March, this area has been a strong selling niche in this market. As you will see, every attempt by the buyers to break out of the structure in the past has always failed, as you see sellers come in to take over the market whenever price comes there. Now, last week we saw price action come into that particular area, as you will see here. Now, the question here is, will this supply zone be broken this week, or will price action respect it one more time to incite a sell off? Now, considering the fact that price action has broken out of that descending trend line that we have here, we might likely see price transition into bearish pressure that might lead into price coming back to retest the trend line in an attempt to continue the uptrend or even break it down to the downside to incite more selling opportunities. Now, to help us navigate this market dynamics, we have some couple of structures here that we will be using to guide our trading decision for the week. And one of the most important structure on the chart right here is our key level for this week, which is situated at the 1.26500 area. And of course, if we go to as far back as the month of March, you will see how the 1.265 has played a major role in determining the direction of price action. In fact, it has been more of selling below the 1.265. So this is what I will be looking at to guide my trading decisions for this week. And of course, you know how we use our key levels in this community ahead of the new week. As long as price remains above the key level, we look out for patterns and structures that support the idea of buying, and we are not going to be selling unless the key level is broken to the downside. Now, before we close on this video, it is important for us to keep tabs with the fundamental factors that will be influencing the sentiment in the market, and of course will be driving the character of price action around this area. Now, by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the asset we are monitoring for this week, we shall be focusing on economic features from both the United States and the United Kingdom economic docket. Now, the first high impactful event for this week is coming in on Tuesday, May 21st, and we are looking at the Bank of England's governor's speech. Now, this speech holds considerable influence over financial markets, as his remarks will be providing the market with insights into the bank's monetary policy stance, economic outlook, and potential future policy actions. Then fast forward to Wednesday, May 22nd, we are looking at economic, in fact, three economic events from both economies. The first one here is the Consumer Price Index from the United Kingdom, which is a measure that examines the average change in prices paid by consumers for goods and services in the last 1 month. A higher than expected CPI can actually lead to concerns about inflation, hereby impacting the sentiment in the market as it may prompt expectations of tighter monetary policy to control rising prices. Then we also have the monetary policy report hearing from the United Kingdom, which is a comprehensive assessment provided by the Bank of England detailing the economic outlook and the rationale behind monetary policy decisions. Then we also have the publication of the FOMC minutes, which will be providing the market with insight into the discussions and decisions made by the Federal Reserve regarding monetary policy. And this will, of course, include their interest rate decisions as well. Then on Thursday, we will be looking at a bunch of S&P global publications, um, um, which will be featuring the composites, manufacturing, and services PMI from both the US and the United Kingdom economy, giving us an insight into the health and performance of these sectors. Then on Friday, May 24, we will be looking at the retail sales data from the United Kingdom, which is an economic indicator that measures the total receipts of retail stores representing consumer spending. So these are the high impactful events we'll be looking forward to. And of course, we do understand that this event here, the anticipation of this event here, will be influencing the character of price action around, or let me say within, the 1.27 and the 1.265 during the early days of the new week. So, what we are going to be doing on this chart at the beginning of the week is to exercise patience and wait to see how the market will react to this particular area. So, are we going to be seeing price action evolve into a reversal pattern in the form of a double top structure where the key level at the 1.265 could become the neckline where the breakdown will incite selling opportunities to the downside. Or are we going to be having an uptrend continuation pattern where the breakout retest of the 1.27 will welcome more buying opportunities in this market? So, this is my simple view on the GBPUSD for the upcoming week. Of course, trust me, I will be with you in the comment section of this video after monitoring how market participants will be reacting to this crucial zone during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the week, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.